Hey guys, hope you are all having an amazing day so far. We had AMC earnings last week on Wednesday, but I decided to wait till this week to make a video on it. I wanted to watch how the stock performed and if any news came out after the fact. My position on the earnings are a bit mixed. We are going to go over everything that was said during the earnings calls and kind of determine how AMC is looking so far. Before we begin, consider dropping a like on the video if you can, and joining our Discord, linked in the video description below. So like I said, AMC had their earnings last week, posted revenues exceeding $1.1 billion, surpassing analysts' expectations by approximately $50 million. It's worth noting that the company has only fallen short of estimates twice in the last 5 years. Adjusted losses per share stood at 54 cents, outperforming expectations by 11 cents. Notably, the company has consistently met or exceeded projections since the fourth quarter of 2020. However, it's important to recognize that the diluted share count more than doubled compared to the previous year, which mitigated the impact of the significant loss by spreading it across more shares. Despite annual revenues climbing by over $900 million year-over-year to surpass $4.8 billion, the company reported an adjusted loss of nearly $319 million for 2023. The earnings themselves were good, but the main problem with AMC from the perspective of the market overall is that it still faces significant challenge stemming from the pandemic's devastating impact on the theater industry. Recovery has been slower than anticipated, something Adam Aron has stated, and which we will go over in a minute, compounded by the proliferation of streaming services offering alternative content consumption options. To stay afloat during the pandemic, AMC resorted to heavy borrowing and extensive share sales. Yet substantial losses and cash outflows persist, even with the help of big showings like the Taylor Swift's Eras concert. In the fourth quarter, the company incurred a cash burn of approximately $150 million, although its overall cash balance showed a sequential increase thanks to the aforementioned capital raise. In the short term, the company's balance sheet remains strained, evident from the working capital still deeply in the negative, as depicted in the accompanying chart. We have talked about AMC's debt a lot on this channel, and AMC reported that they closed out 2023 with a hefty long-term debt load exceeding $455 billion on its balance sheet. Nearly two-thirds of this debt matures in 2026, with the company lacking a clear repayment strategy at present. While refinancing remains a viable option, the probable approach entails ongoing equity raises. As you know, AMC utilized the preferred shares, known as APE, to help lower the mounting pressure. But the conversion of APEs to AMC significantly contributed to the overall amount of outstanding shares, which drew it from 52 million to 260 million last year. This was and continues to be very distressing to investors, given this certainly allowed shorters to have even more room to short this company further, something that has been incredibly profitable as of late. So overall, AMC closed the fourth quarter beating EPS by 11 cents and revenue beating estimated by a little over $58 million, but continues to have that looming debt problem that it clearly has no plan to address. Let's now go over the earnings call, which we have a lot to discuss. So Adam Aron got on the call, calling 2023, and I am quoting here, another year of strong operational and financial gains for AMC Entertainment, affirming the success of our strategic recovery efforts as the industry continues to rebound from the lingering effects of the pandemic. He touted the company as once again defying Wall Street expectations, in which he is correct. He said, global attendance at AMC theaters tallied 240 million guests for 2023, which was up 19% over the prior year and marking the highest annual attendance in the post-pandemic era. He goes over some of the earnings numbers and then starts reflecting on his overall impression. Adam Aron said, and I quote, Our positive recovery trajectory continued in 2023, not enough for where we hope to eventually wind up in the year ahead or the years ahead, but encouraging progress again was made. He brought attention to the fact AMC has become much more efficient after having to adapt to pandemic stresses. Due to AMC's high-margin food, beverage, and merchandise sales, along with rising ticket prices, among other things, have led to a contribution per Patreon to be up by 37%. He said domestic industry box office has continued to grow year over year, but then said that the growth rate has not been enough. Adam Aron described the blending of great musicians and movie theaters as an innovation for the company and that it will continue, which is honestly a big plus. He immediately reiterated how 2023 did not live up to its full potential given how crippling the rights strike was and how they hurt movie theater operators who were forced to wait for delayed movie titles. He reiterated then again that AMC was not a good year for shareholders, acknowledging that the price of AMC shares has fallen to a fraction of what it was last summer. He said there's a lot of garbage information on the corners of the internet and that facts have been distorted given bad motives have been assumed. As such, he outlined a couple of points. First is that, in regards to the litigation that took place in the Delaware courts in 2023, it was shareholders that voted on the proposed actions, citing a 72-28 margin. Secondly, he said AMC did keep its word in that they would not raise equity sales through 2021, stating that the company could not survive on the $17 million that they would have had if they had not diluted. Thirdly, and this one is important, Adam Aron acknowledged that the company was on the threshold list of a notable length of time, with the numbers of failed to deliver shares being too much for too long. He said AMC has kept the New York Stock Exchange and appropriate regulatory bodies well informed, but that AMC is not the stock exchange itself and do not have the ability to regulate or enforce trading practices. He said it's disappointing how many people out there type into their Twitter feeds that the management team at AMC is working against the interest of shareholders. He went on to clarify, the company cannot make money working against the investors, and took a bit of time calling these views outreaching and not true. In regards to what's ahead of AMC, which is by far the most important part of the call, in which he himself asked if there is hope for the company, he said the outlook for AMC appears promising, with the box office projected to regain strength starting as early as March, just 2 days away. This momentum is anticipated to build further throughout 2024, with the potential for a particularly favorable box office performance in 2025 as movies delayed by the pandemic finally see release. Despite this optimism, AMC recognizes the importance of addressing its debt obligations, particularly those maturing in 2026, by extending maturities and ensuring robust cash reserves. This strategy, coupled with a commitment to running the best company possible, prioritizing guest satisfaction, prudent innovation, maximizing earnings, and reducing debt, instills confidence in the company's future. As the preeminent leader in the movie theater industry, AMC remains steadfast in its commitment to shareholders' interests, aligning with CEO Adam Aron's own significant personal investment in the company. Aron's dedication to shareholder value is evidenced by his decision to recommend a substantial reduction in his target compensation for the next 12 months, demonstrating solidarity with shareholders during challenging times. He did stated that AMC will start out this year with $884 million in cash, while acknowledging recent market fluctuations and personal losses in his own holdings. Aron remains resolute in his commitment to AMC's success and emphasizes the importance of cash reserves in weathering industry uncertainties. Looking ahead, AMC anticipates a resurgence in box office performance, paving the way for a promising future for both the company and its shareholders. So that was pretty much the basis of these earnings report. Personally, as I said in the beginning, I am mixed. I do like AMC has cash on hand but hate the fact that it raised it all by diluting its own shareholders. I will give AMC credit. This was done because of the shareholder vote though, so it is also because of investors' own discretion. The debt AMC has is and continues to be its biggest burden, and it is an incredibly dangerous amount that cannot and should not be understated. There is room for more dilution, but it is clear the company won't be able to gain enough cash through it to pay off its debts. If AMC can navigate current waiters well and continue to have surprise releases that help those box office numbers continue to grow, I see another good year for the company. I strongly believe that AMC can navigate these very challenging times. I am no fan of the CEO or board members, you guys should already know that, but if the question is if it's possible for AMC to come out on top, then the answer is yes. Refinancing is certainly an option. It's still there, and something that AMC would do well to consider. However, it is likely that the strategy going forward for the moment is to tap into shareholders' pockets and continue performing equity raises. Because of this very fact, it is very likely AMC's price will continue to suffer along with investors. The biggest question I have is, how many more equity raises can AMC do? And based on the current evaluation of the company, I think they have one more major one in their calendar. There could be various ones, but I expect one more major one that will be followed with the announcement of another split to help boost the share price itself. After that, AMC's ability to make payments on debt will single-handedly be up to their own ability to continue generating and enhancing revenue streams with the business as is. I do think that it's pretty impressive how well the box office has performed so far. Given that Apple, Amazon, and Netflix have all expressed interest in releasing movies in theaters given it helps cover the costs of production, and the fact that we can expect to see more concerts reach theater screens as well, I do see a lot of upside for the box office from that angle. I will say, however, superhero fatigue seems to be here, and given those were the main contributors for box office success for the past decade, it will be interesting to see how they navigate that in the future. This year, we have some really good movies coming out, and I can see AMC making it through. Dune 2 came out, and it has been an absolute hit, and I can see many others following up in similar shoes. AMC, as a company, does have a role in the future. Theaters are far from dead, as evidence clearly shows. What's at stake right now are two things. One is how AMC will deal with that debt, given it matures in 2 years, and how it will attempt to raise money given equity raises hurt investors. Let me know your thoughts down in the comments. Thank you so much for watching this video through its end. Make sure to join my Discord and hit the like, and I hope to see you on the next video this week. I am currently working on another banger dated for Wednesday at the latest. Until the next one, peace.